Hi guys, good evening. So let's see what we can cover for today. Right, so let's see what we can cover for today. Now, today we'll be talking about risk management and position sizing. That's what we're talking about today. So today our topic will be risk management and sorry and position sizing. Sizing. So this is what we're talking about today. Right. So now, first question is, what is risk management? So let me just write that by the side here. Right. So now risk management. Sorry about that. Risk management refers, or we can say risk management. There are just different way you can put it. You can also say that it refers, or we can say risk management is the process of identifying and then some identifying or risk management process of identifying, or you can also say risk management is a technique. So let's use this one. Risk management is a technique, or is it or are techniques. So let's say that word. Risk management are techniques, right, used to manage potential losses and for you to be able to protect your trading capital. So let me just increase that a little bit. So this is what risk management is, right? So risk management technique, or you can say it's a technique, right, used to protect, sorry, to manage potential losses and also protect your trading capital. It's just a simple definition, right? So it's just a technique, or it's a technique that you can use to manage potential losses and protect your trading capital. That's just what risk management it is. So it's just like, let's say maybe you are doing something. It doesn't mean that it has to do maybe regards to money, it can be anything. So you're trying to protect the risks, right? You're trying to protect this from that thing being either harming you or harming or even destroying that what you're trying to build or create. Right, so that's just what risk management means. And now today we'll be talking about I think to be listed into four places. Right, so I'll just divide this risk management into four places and I'm going to explain them. Right. So and then we'll move to the position sizing as well. Right. And we'll also talk about what position sizing is. And this is where I'm going to show you how to manage your risks, how much you're willing to risk per trade, right? So when you enter a trade, how much are you risking? How would you know how much you're risking? What loss size to use, right? What loss size to use? How much are you risking? What is your potential reward? What is your risk to reward ratio that you're going to get on that trade, right? So that's what we're talking about. So let me also define or let me just write a little bit about position sizing as well. So position sizing, this position sizing is the highest. Okay, so I use the word highest amount of capital to use when not used to can say is the highest amount of capital to use to trade, or the highest amount of capital to use um, when trading. Right, so I'm just going to use this to use to trade. Like considering the risks, um, considering the risks, the potential risks, considering the let's say we consider the risks and potential return. Right, so position sizing is just the highest amount of money. Let me just tag that down. Yes. So we talked about risk management, and I said risk management is a technique that is used to manage potential losses and protect your trading capital. So that is just what risk management is. A technique, which one is it? It's a technique used to manage potential losses and protect your trading capital. Why for position sizing, it is just the amount of is the highest amount of capital to that you want to use to trade, considering the risks on that trade and then the potential reward that you are going to get right on that trade. So that's just it's just a little brief definition on the both of them. So I say we're talking about risk management. Is I'm going to divide it into four places. Right, so I'm going to divide it into the risk management into four places. Now the first one is going to well, the first one we'll be talking about is so the first one we're talking about, let me just the size. So the first one we'll be talking about is your risk capital. It's capital. Right, so I'll just drag that down here. Right, so this is the first one we're talking about. And then the second, so it's capital. The second one we're talking about is your risk per trade. Right, your risk per trade. And the third one we're talking about is your risk to reward ratio. I'm going to show you how to calculate all this. Right, your risk to reward ratio. And then the fourth one we're talking about is your maximum exposure. So these are the four things we're talking about under risk management. Right, so under risk management, we're talking about these four things. The first one is your risk capital. The second one is your risk per trade. The third one is your risk to reward ratio. And the fourth one is your maximum exposure. Now, let me just talk a little bit about them before I then list some things under them. Now, as I said, the first one is your risk capital. Now, this is the amount of money you're willing to risk, right? How much are you, the amount of money you're willing to expose, right? To like the risk capital, the money you are putting in your account. Now, okay, any money you put in your account, just have it in mind that the money is gone, right? So I'm trying to do something to your mental state now, right? So just listening carefully. Now, risk capital is the amount of the like when you deposit in your account, just have it in mind that that money is gone, so that you're risking that amount of money in your account. That is just what risk capital. So the amount of money you're putting at risk, right? So let's say if you have $100 now with you in your account balance, and now you now remove $50 and deposit it into your trading account. That 50 that you deposit into your trading account is your risk capital, right? So the second one is risk per trade. Now, on any trade they are going to place, right, is the amount of money you are willing to place, you are willing to risk on each trade you place, right? That's what risk per trade mean. On each trade you place, how much amount of money are you or capital are you risking for that trade? Right. And then the third one is risk to reward ratio. This is if you're risking how much, when you're risking a particular amount in a trade, what is the potential reward that you want to get on that trade, right? That is just what risk to reward ratio. So yeah, risk and then to reward ratio. So how much um potential return, right, are you expecting to get on a trade based on risking a particular amount of money? That is just what risk to reward ratio is. So just like multiplying the risk, your loss, your capital they are risking on that trade. So you are multiplying it to get know the profit target you want. Right. And then the fourth one is your maximum exposure. Exposure. How much capital do you want to expose for that day? Or like let's say you plan to take let's say you plan to take three trades or two trades in a day, right? And then you want to risk, you have your account balance of $50. Now you want to risk $10 for that whole day, right? So this is like the maximum exposure you can risk for the whole day or for that trades you want to take. So if you are taking two trades and you want to risk $10, right, in those two trades, it means that no matter whether it's one single trade they are going to place or two single trade, or you're going to open multiple position, right? You should have it in mind that you only want to just risk $10. So if you're opening one position, two position, or multiple position, have it in mind that it's only $10 you want to risk, right? So that's what maximum exposure is. So now let me just write a few things under them. It's just based on what I've explained. Now for the risk capital, right? As I said, it is the amount of money. So let me just jotting down. Let me just be writing the notes under them. Right. So the first one under this risk capital will be the risk capital is the amount. So the first one is the amount of money you are com you are comfortable losing. And this is the first one, right? This is the first one. Then the second one here, the second one is whatever money you deposit, right? So whatever money whatever money you deposit to your life account, comma, to have it in mind that the money is gone. Guys, just have it in mind. Not like, oh, your mind, meaning that your mind will not be there. No, but just don't be attached to the money. That's just what is simply saying. Do not be attached to the money that you have deposited. If not, don't just deposit it. Just keep your money in your account and spend it as you want to spend it, right? But as long as you want to deposit in your life account, don't be attached to the money. Right? Don't be just listen to what I'm saying, guys. Don't be attached to the money. So the third one we're talking about here is if you risk too much, sorry, if you risk too much of your net worth, if you risk too much of your net worth, then it actually messes up your trading psychology, guys. I think after this risk management, the next one we'll move to is trading psychology. Right? Then trading psychology, maybe we can take like two more classes about the trading psychology, because I just want to say a lot of things. And then before I will now start teaching you the strategy part, right? I will start teaching the strategy. Strategy is actually simple. All you just need to do is to practice as much as possible. That's just it. So, um, if you risk too much of your net worth, it actually messes up your PSY psychology. Now, the fourth one will be is that do not possess Guys, if you can, if it's for you to write this down, please write it down to review everything I've taught you from the start of this classes, by from part one of the video, from the places that I asked you to start watching to the ending point of any of the video I'll be posting on YouTube channel, Telegram group. Please watch it over and over again. Guys, watch it over again, practice, try to make all these things sink into you, right? You might be thinking, okay, trading is easy. Actually, trading is not easy. Let me just be real with you, right? Trading is not easy. It is the hardest way to make easy money. I can tell you that this is the hardest way to make easy money. You can learn the skills 3 months, 6 months, right? You can learn the skills, but what will make you unprofitable can take you years, and it's just your emotion, your psychology, right? That's what will take you years for you to master. So you can see people, you hear people saying, okay, I'm trading for 3 years, 2 years, um, 5 years, most of them, right? Some even 10 years. Like I've heard of someone who have trading for 7 to 10 years and it's not profitable yet. Why? Because of psychology, emotion, right? There's no risk management. As I'm saying all these things, I'm also talking to myself, right? I'm also talking to myself because, yeah, I have the strategy, right? I know my risk management. I know what I should do and not to do. But sometimes, when you want to make some quick bucks in the market, then a lot of things begin to happen. Your emotion triggers. Then you want to force the trade. You want to start, gambling on the trade, and before you know, you're of exposing almost all your whole account to losses. Before you know, you have blown your accounts. You have become depressed. You're sad. You don't want to talk to anybody. That stuffs like that, right? So as I'm saying this, I'm also talking to myself, right? So the fourth one here under talking about do not deposit or sorry, all the money in your bank account into your life account. So I'm writing all this main key points in capital letter. I have reason why I'm doing that, right? I have reason why I'm doing that. So now the next one, I just want let me see how fast I can really catch up with this. So the next one we're talking about that's under the risk per trade is just basically know how much of money you are. So let me just write that. So it's basically to know how much or how much it's basically to know how much money you are risking, or you are willing. I would have just wrote this all this now, right? Six, but I decided to just write it to do it in the class. Like it was intentional. If not, I would have just sitting down and wait when the class here and then now explain. So let's say maybe like risking 1%, 0.5%. Let's say you're risking 0.1% of your account balance, right? 1%, right? So you should not, because this will not give you much room for you to, like, maybe for errors or anything like that, right? To learn maybe from your mistake in order not to blow your account in a single go, right? So this is just what you use. And then second one you can put here is to calculate your loss size. Calculate. I think we might do this training psychology or position sizing on the next class, right? So I think we'll do position sizing in the next class. So next to calculate the lot size. So I don't think we can cover up for with this. We are doing this. Right, calculate the lot size to use. This is where to know like your stop loss, like the distance of your stop loss, how much is it going to you risking if it goes to your stop loss, and how much are you going to make if the trade goes to your take profit. So this is you knowing the risk per trade, right? On every trade you are taking, right? How much are you risking on that trade? That's just what it means to calculate. So you're going to use the lot size to calculate how much you're going to risk, right? And then the third one is for you to use a position size calculator to calculate your stop loss distance and risk per trade. Okay, let me just write that down, but I'll show you an easy way. So use position size calculator. Size calculator to calculate your stop loss. Well, I'm going to show you a way to calculate it easy. You don't need to go to a position size calculator. Right, so well, let me just put that down here. And your weeks uh trade. So then the under the risk to reward ratio, yeah, you just measure how much of your potential return. Right, so let's move that here a little bit. Next year is to know, let's say one is to measure to measure how much your potential reward slash return is for every dollar you reach. Like to measure how much your potential return or reward is for every dollar you reach, right? So for any every naira or for depending on your distance. So the next one is to figure out your risk to reward ratio. Like so figure out sorry, yeah, figure out your like risk what they showed. Let's say maybe you're doing 1:2, 1:3, and so on and so forth, right? So if you see me do one with these two dots, two meaning that's 1:2. You're risking an amount of money to make twice your money. If I put 1:3, you should know that you're risking one amount to make three times your money. If I put 1:4, if I put 1:10, mean you're risking a particular amount of money to make 10 times your money. So that's just what I mean. So under this one, you can also calculate your stop loss, your take profit, you calculate your risk to reward ratio. So that's under this part two. Now you calculate your stop loss, your take profit, your risk to reward ratio, right? And assess your trade outcome and make better trading decision for the next trade, right? So this is what you're going to do here to make better decision for the next. I'm just trying to be fast, so I'm not going to really put that down here. But if you're jotting, you can just listen to what I'm saying, pause the video to listen back to it and then write it. So why this next one here? So is just the overall amount of money that you are willing to have at risk at any one time. So this is what I was explaining in case you're opening multiple position. But as I suggest as a beginner, please do not open multiple position when trading. It will do a lot of damage to your trading psychology, right? And your trading journey. So please do not open more than one position as a beginner. So the next thing will be your maximum exposure is determined by the number of trades you can be in at any one point in time. So let me just write that. So maximum exposure is determined by the number of trades you can be in at any one point in time. This is also like, the first one is like the overall amount of money that you are willing to have at risk at any given. So, except if you have calculated it. Now, if you want to open multiple position, right, have it in mind that, okay, how much do you want to risk? And if this trade that open multiple, if you calculate all of them, is it going to, if you hit your stop loss, are you risking that exact amount that you plan to risk? That is just what this first one means. The second one, maximum exposure is determined by the number of trades you can be in at any one point in time. This may be opening that multiple position, maybe if you place a trade on maybe on gold now, let's say USD, and then you enter another trade maybe on GBP USD, right, or USGP or any other pair again. So the maximum exposure is not determined by the number of trades you're taking, right? So only make sure that your risk to reward ratio, right, is still targeting at least 2 to 3% or 5% um your this thing, your total balance, right? So let's say maybe you're risking 0.3 to maybe 1% of your capital, right? So maybe let's say you're risking that. So what you just all you just need to do is to divide it, and then you know the amount of trades you can take at a time, right? It's just for you to know the trades you can take at a time. So let's give an example here. Now let's say you're risking, um you want to expose 3% of your account, right? 3% of your account on like on a single one time, as I said here, at any one point in time. So let's say you're risking, okay, let's give an example. Let's say your maximum exposure, maximum, hear the word maximum exposure. So let's say your account is $50, your maximum exposure, you want to reach 5% of your total balance, right? So your maximum exposure is 50, is 5%, right? And then now on each trade, right? On each trade, you're risking 1%, right? So let's say if you have a $50 account, right? So let's say you have a $50 account, and now you want to, your maximum exposure, right? Your maximum exposure of that your total account is 5%. So that's 5%, which is 5 divided by 100, then times your $50. That's two $2.5, right? So this $2.5 is the 5% of the 5% you're willing to risk on the, or like your maximum exposure is 5%, which is $2.5. So if your total balance is $50 and your maximum exposure, right, is 5%, 5% of $50 is $2.5. Now on, and you want to, maybe you're opening like 5 positions or so, and you want to risk 1%, or you want to open 5 trades and you want to risk 1%. So you're going to divide that your um 5%, your maximum exposure, divided by your risks per trade, right? So which is 1%. So that's $2.5 divided by 1%. So you are now going to get the what you are going to be using. So if you are doing 1%, which will be like 0.01, right? So your 2.5 will now be divided by 0.01. So you now know how much you're willing to use. So just the calculation, sure. But if you don't really get it, you can just forget about it. It doesn't really matter. I'm going to explain more about it later on. So let me see, how many minutes do we have? So we just have like few minutes. So let me just show some quick things on the chat. All right, so let me just show some. I think this is self-explanatory. Don't really need to come and be explaining all this thing here. So now let's just go on the chat. Let me show you some things here. So now, for instance, this is the trade I took here. I know we might not be able to cover this today because we don't really have much time, but I'll see if I can add some things on the next tomorrow's class, right? On the next time I'm going to do class. So this is just some things you need to know about risk management. Now, let's look for, okay, let me use this trade itself. So now, this is a trade I'm actually currently on, right? Although I've closed my positions already, right? I closed my positions already on this trade. Right, so now let me just move this. Okay, now let me just move this here to this point here. Now, the simple thing I'm doing here is I'm saying that now you can see from here, this is my entry point, this is my stop loss target, and this is my take profit target. And you can see that I'm making two ratio, 1:2.34, right? 1:2 point, I can see it's a risk to reward ratio, 2.34. That means I'm risking a particular amount to make 2.34% of my profit. That's what I want to make. So now, when you're risking a particular trade, right? Let's see if you have now you want to know how much you're willing to risk on a trade. So let me go to USD JP GBP USD or anything. So let me use this one for instance. Now I'm going to show you how to calculate. Now I told you in last classes that we make money using pips, right? This is how we make money. Whether you are losing or you're making money is using pips, right? And then when you want to trade, what you use to trade is lot size. So you're not just going to say I want to trade 5,000. You're not going to buy 5,000 and put no. What you're not trading, you're trading in lots. But when if you're making money, you're losing in pips. So now this is a trade, for instance, here, right? Actually, this one missed entry. Anyways, right, this statement is empty. So let me just delete this. So now here, this is my entry point, right? At this point, I separate these two colors. So this is my entry point. This is my stop loss. This is the amount of money I'm willing to risk on this trade, and this is the amount of profit I want to make on this trade. You can see the risk to reward ratio is 5.92. So 1:5.92. That's what I'm making. 1:5.92% or reward. That's what I'm making. So if I'm making, let's say 50,000 here, then I want to make 5.92 times my money, or 5 times my money, right? Or 5.92 times my money. So if I'm still 50,000 or $50 here, then what I want to make here is um about three about $300, right? 2 point something, close to $300. So that's like close to 6 times my money. That's just what's telling me. Now let me show you how to calculate so that you know the lot size to use and what not to use. So I also talked about using position size calculator, but you don't really need that because I'm going to teach you how to do it here. So you don't really need that one. Right. But if you want to still search about it, just go on Google and search for position size calculator to show you all the things to do, which currency pair you're trading, how much your account balance, how much you want to export it, and then it's going to bring out some. So let's see if I can just check that very quick. Right. I don't want to really check, so position size calculator. So I said I'm not using it, but I'm just going to show you so you can use that. You can see different ones. So let me just use this baby pics. Right. So let's just use this baby pics. Now it's simple. Scroll down, you can see this is the currency pair. So you can select the currency pair, right? The currency, like if you are, so these are just the major coins. So if it's in US dollars, you select. Now the next thing to do is your account balance. How much is your account balance? So let's say my account balance is $50. How much do you want to risk per trade? How much do you want to risk on that trade? So let's say I want to risk 5%. You can see percentage, right? So 5% of my money. Then what is your stop loss? You are going to put your stop loss this thing here for that trade. Then you now select the currency pair. Is it USD, GBP, or whatever pair you want to trade here, AUDS, anyone. Then when you put it, you just need to click on calculate, and it's going to load the this thing here. For why it's not going to do is because I've not put in my stop loss pips, right? I've not put in it here. And you can see it's called, I think, called the current this thing. So I'm not putting any of this. That's why it's not loading. But the moment I fix all of this and I press calculate, it's going to load this for me. I don't need to explain for you what ask price is, or I don't need to explain for you what bid price is, right? I don't need to explain this thing for you. So if they ask you for coins bid price or coins ask price, go to your MetaTrader or you use your trading view to check it. If you don't have it on your trading view, use your MetaTrader. You are going to see the bid and the ask price there. The bid is up one, the ask is down one. So you know it and just paste it here. I don't even know why they're asking this anyway, but it's not really supposed to be. Let me see if I can see any other position size calculator. It's not supposed to be asking me for that. So let's check my Facebook calculator. So it's simple, right? So you can see something like, so USD. Sorry. So this is USD, right? So now, currency, I want to use USD. Now you put your account size. So let's say you're using $50. Now, how much are you using to risk reward? Let's say $5. Now you're going to put your stop loss pips. Now, the moment you put your stop loss pips, right here, trade lot. This, whether it's 0.01, 0.02, all those things, they are going to calculate. Now, the moment you calculate, it's going to load it for you. It's because I've not put in my stop loss, that's why it's not doing anything. So just keep away of this, but I don't really use that. So let's just go to the next thing we have sharp. So now this is my stop loss, this is my take profit, right? As I said, I'm making about 5 to 6% of my capital, of my risks. Now let me show you how to calculate how much you're willing to risk on a trade. So let me just do this. Now I'll open a new tab, right? So let me show you how to calculate this. Let me move this here. Now you can see here when I hover on this, you can see that it's showing me. I don't know if you can see this point that is showing 27, right? I don't know if you can see this 27.5 before the amount. You're seeing amount 37.5, but before the amount, you're seeing something like 27.5, right? The 27.5. Now, I hope you are seeing this. Now, this 27.5, The first two letter bar, the first two numbers, sorry, is your pips, right? There's something also called points, right? Most of the time you see it's calculating in points, you will not see it's calculating in pips, so you just need to know it, right? Points and pips are a little bit different, just the numbers, but when you're calculating, it's still going to give the same thing. If you are using points instead of pips, right, and you calculate it, you still get the same amount or the same distance. If you use pips, it's still the same thing, just that the numbers are different when calculating them. So you can see this 27.5. Now this is your risk, this is your stop loss, this is your, like, your amount you are going to, you are risking, but that's not where you're going, that's not your stop loss, right? Your stop loss, let me show you where your stop loss is, guys. Your stop loss is around 131. Just look by your right hand side, 1.32150. That's your stop loss. If you are not sure about it, you can just double click on this, your long or short position. When you double click, just scroll down, you are going to see stop loss level. Now if you see stop loss level, you see 1.32151. Now this is your stop loss, right? This is your take profit level, right? So this is the price, and this is your entry point, right? This is the price as well. So just take note of, you can see this is the entry point, this is your entry point, this is your price, your take profit price, right? This is your stop loss price, right? So you can just keep that in mind. um right, so now if you over here, now you're seeing 27.5, so let me just write that down here. 27.5. Now this 27.5, so let's see what is our take profit on. So take profit on is showing, let me just go down up here, so you can see it up here. I see it up here, it's showing 162.7, right? So 162.7. Guys, please just pay attention to this, right? So let me hover on this stop. Let me just hover on all of them. Now you can see my stop loss part now is showing 27.5, which I just wrote down here. Then now, why for the take profit, you are seeing 162.7. Now all coins have their own different ways, so right? Gold and Bitcoin to be different from if you are trading currencies. But I'm still going to explain very fast. So right here you can see 162.7. Now this is when this is in pips, right? Because this is like 27.5 pips. This is 162.7 pips, right? Now, if you hear point, right? If you hear point, so now, okay, let's give an example on this trade. Now, our stop loss amount here is showing 27.5, right? I want to use a lot size, a micro lot of 0, or mini lot, sorry, of 0.01. So let's just go to my browser now, easy. Now let me show you something. 0.01, right? This is my lot size. Now times, now I want to know the amount of money I'm willing to risk. Now we said that our this in here is showing 27.5. So all I need to do is to times this my lot size times that 27. Now I'm not going to use I'm going to add this point here. For this one, I'm going to add this point. I'm not going to add the point, sorry. So instead of me doing like this 2.5, I'm doing press and calculate it. It's going to give me something like this, but this is not what I want to do, because I want to know, I'm teaching you the way I do it, the way like a very easy way, right? So now what you're going to do is to ignore that dot, right? Ignore the dot and just type the complete something like this, because now this is in point. Now this, like, this in pips, right? So let me see if I can write pips here. So this is 27.5 pips, right? So this is 27.5 pips. Now why for points? It will now be 275 points, right? This is what you now see. So here it will now be 27 pips, right? Why for point will now be 162.7 points, right? So now this is how you see it. So sorry, there's no dot here for the point. Point is just like the total distance. But for other coin CP, I'm going to show you, especially for gold and Bitcoin. So you can see the difference, but you can see pips is having that 0.5. Why for my point don't have point? It's just I join the numbers together. Same thing here. So now I say what you are going to do is times your lot size by the point. Right, so you move that point and times it by this 275 completely. So what you do, I'm going to do is times it by 2, so you can see this is 275, and then I'll calculate it. Now, when you calculate, it's going to give you something like this. You can see 2.75. Now, $2.75, this is just what it means, right? Because you know we're using dollars now normally in the whole market. So if you're using Naira, I'll show you the same thing. It just applies. So if you're, in case your account is in Naira or any currency, guys, any currency, right? If your account is in any, if your account is in dollar, if your account is in Naira, if you're using Naira to trade, if you're using Euro to trade, if you're using British pound to trade, it doesn't matter. And it doesn't matter any currency, but I'm still going to explain it for you. Now you can see here is showing 27.5 pips, while our point is 27. I told you are going to move that point, so 275. You can see it here. So when you want to calculate, you're going to calculate your lot size times your your point. That's this point. Don't remove these dots, please. I'm teaching you. So remove these dots and just join it together. So that's 275. Now when you say 0.01 times 275 and you calculate, you're going to get $2.75. Now this is the amount of money you're willing to risk on this trade, right? So if this trade goes and hits your stop loss, the only amount of money you'll be losing is $2.75. Now, your reward ratio is 5.92, right? So you can see 5.92 here. Now, if you want to now know the total amount you make, if this trade goes to your take profit, now you know that our ratio is 5.92. So that means you're risking $2.75 to make 5.92% or 5.92 as the amount. So what you just need to do here is to come here and say times your risk reward ratio 5.92. Guys, can use your calculator on your phone. I'm just using this one. So you are now risking. Now, if this take goes and hit your take profit, what you'll be making is $16.28, meaning that you're risking 2.75 to make 16.28. If you are not sure and you believe maybe it's not correct, now this is what I'll show you. Now you can see this, your point is 1627, right? So let me do like this, 1627, and then click on enter. Now what you're going to see, you can see 16.27. It's still just the same thing with that one. That was 16.28, just a little bit different, but you can see a 16. So this show that if this trade go your way, you're going to make $16.16, right? So if you don't want to be doing this separate, just calculate your stop loss, times it by your risk to reward ratio. You now know how much you're going to make. It's as simple as that, guys. It's as simple as that. Let me see if I can look for another trade and explain it, right? Before we call it again, tomorrow we'll continue. Now look at this trade now, for instance, right? This is a trade. Now you can see the stop loss here is showing 20.0, right? And our risk to reward ratio is showing 6.16. Now it's as simple as that. How much what loss size do you want to risk? Or how much, if you say you want to risk $3, okay, so you are going to use 0.01. So 0.01 now times, now I told you this 20, just 20, that is our pips. With, if you now say 200, that's remove that point that is there to be 200 is our point, and we used to use point to calculate it. So what you now do is now say times 200 by 200, you are going to get your amount in dollars. So meaning you're risking $2 to make, what is the risk reward ratio here? 6.16. So you just times 6.16, meaning that you're risking $2 to make $12. It's as simple as that. That's 6 times your money. I hope this is clear and this is understandable. Now let's go back again. So let's say you're risking 0.01, right? And then times 200 bar, that's your point. I've told you here, you can see it's 20.0, but if you're calculating it now, move that point and join it together first. So you calculate, see, you're getting $2. Now for my Naira, for my Nigerian people, what you just need to do, this is $2. Now what you just need to convert this into your currency, to your coins, that's times. You can, for any coins, for any country, guys. So my own country, I'm using 16, so that is $2. You're converting to Naira, sorry. 0.01 times 200, right? So times, now what we now do here, so that's $2 times converted to Naira, right? So we're converting to Naira, that's 16, right? So $1 to Naira is 16. So you're now risking 3,200. You're risking 3,200 to make how much? 16.16 reward ratio. That's so times 16.6. Was it 16? Sorry. Okay, 6.16. Sorry. So that's 6.16 risk to reward ratio, and then equals to, so you can see you're risking 3,200 to make 19,712 naira. That's what you're risking. So this is how to calculate it. Please, what dividend over, it doesn't matter. Now if I'm using, let's say, USDJPY, so let's say I enter this trade for a buy or for a sell, whichever one. Let's see. So let's say I enter for a sell here, a buy, sorry, and then I put my take profit here, right? So it's as simple as that. Now you check your stop loss. You can see here is 62.3, right? 62.3. Now what you just need to do, if you're risking 0.01, now since it's showing 62.3, you know that what you're going to do now is 623, right? So that's 0.01 times 623, right? Then equals to, now you're risking $6.23, right? $6.23. What is the reward ratio here? The reward ratio is 4.62. So you now say times 4.62. So this is, you're asking $6.283 to make $28, right? This is, so if you want to do for my Naira guys again, for my Naira people, my Nigerian people, so you can see this is 62.3, right? Which is 623 now. So what you're going to do here is 6, so 0.1 times 623, which is $6.23, right? So convert to naira, simple. You convert to the current exchange rate, right? So if you want to see this in naira, in case you're not understanding dollar at the point that you're starting, so just convert it to dollar, which is, so if the current exchange is like 16, so that's $2.23 times 16, and then you're going to get the amount they are risking, which is 9,986 naira, right? 9,986 naira. That's what you're risking.